Recently, NAREIT published its annual Compensation and Benefits Survey. Once again, the survey was conducted by FPL Associates. Joining me here in NAREIT's Washington, D.C. headquarters is Jeremy Banoff, Managing Director with FPL. So Jeremy, let's start. Can you just kind of describe the survey in brief terms?
Sure, absolutely. I mean, we've been very pleased to partner with NAREIT for now 15 years on what's widely considered the most comprehensive compensation survey around. The survey is aimed to capture a variety of compensation trends in terms of program design, structure, a variety of other human capital related matters as well, benefits, perquisites, and a detailed trend write-up in terms of what's going on in the real estate industry and how that's impacting compensation, as well as what's going outside of the real estate industry for additional context.
So how does this year's survey differ from last year's survey?
Well, in a couple of different ways. One is we revert back to surveying on benefits. Every other year we alternate between benefits and board of directors compensation and employment contracts. And with benefits, there's a variety of different questions we ask, such as 401ks, the matching, vesting, investment options, health, medical, dental insurance, what's contributed by the employer or the employee, pension program design, paid time off policy, a lot of benefit questions, as well as the fact that we've actually added some new positions this year based on participant feedback. So now the survey has over 100 positions, and we received enough data to publish on all 100 positions this year.
And Jeremy, you mentioned you've been doing this survey for a number of years. What struck you as maybe one or two significant points from this year's survey?
When you look at salaries and the health of the industry overall, REITs were not immune to the downturn of the broader financial markets. So last year when we looked at the survey in 2009, and there's a question that projects salaries for 2010, those participants were somewhat minimal in nature in terms of what they thought increases would be. Most thought there would still be another year of freezes. When you look at the 2010 survey, the actual increase that took place were healthier, meaning that people paid out increases overall, still on the lower end of what's traditional, 2 to 3% on average, but still shows that things ended up being a little bit better than anticipated.
And have you noticed anything in terms of hiring trends in any specific areas, whether it's development or acquisitions, that might reflect some of the things going on in the broader market?
Sure. Well, a couple of things. One is we don't specifically ask in the survey itself that question. We ask in a broader perspective, which I'll give you that answer in a moment. But through our sister company, Ferguson Partners, they actually focus on executive recruiting within real estate. So we know firsthand from them the placements that they're seeing and the increase in activity that, number one, asset management and portfolio management professionals. Number two, capital raising professionals, even though it's still difficult, but people want to leverage those relationships. And recently an uptick in transaction professionals as well. What
did you learn from your conversations that, through the survey and as well as your conversation with REIT management related to compensation and benefits and how that reflects the overall health of the industry?
Well, I'd say, generally speaking, people are cautiously optimistic. We spend a lot of time, particularly in the publicly traded REIT space, we represent quite a few companies out there. And the discussions are very strategic in nature, really a holistic examination of performance, both absolute and relative, given the market dynamics. But as everyone well knows, 2009 saw a record year of capital raising within the REITs. They outperformed the broader market indices for total returns. 2010 is actually shaping up to be similar pace of equity offerings, outperformance in terms of returns. And recently, a lot of companies are exceeding earnings guidance. So I'd say, while we recognize that things aren't there yet to where we were, hopefully the worst is behind us. And again, people, I feel like the management teams are cautiously optimistic overall with how the industry is performing.
Great. Jeremy, thank you very much.
Appreciate being here. Thank you.
For more on this survey, visit the publications section of REIT.com.